Good morning, good afternoon, good evening, traders from across the globe. Thank you for tuning in. Thank you. And as I have been promising you in every video, and as I promised you before this started, when the shit hits the fan, there is nobody to stand behind like me and Omni. We got you. Am I right, kids? Oh my God. Once again today, Monday, knocked them dead. I don't know if every day is going to be a winning day, but Omni seems to hone in during these volatile moments. You need to get with me, livewithoscar.com. Hang out with me in my live trading room. Don't trade alone. What's wrong with you? You're going to get chopped up. Listen, I have been trained my entire adult life on the trading floor to not panic and take advantage of stuff like this. And that's what I do. Ask the people who are in my trading room. Join me, livewithoscar.com. Come to the trading room. Grab a free 2-week membership to my Platinum recommendations. The room is free, no credit cards or any mess. The Platinum membership is me sending you my trade recommendations as they happen. If you need that right now, and many of you I am sure do, the Omni is just banging away. Come let me help you guys. What is stopping you? Come to Live with Oscar before you lose your accounts. I can't promise you we win every day, but Omni's doing very well. This is a very risky game if you've got your stops in the wrong place, if you don't place stops, if you don't know what you're doing, if you're short selling options. Almost any market right now is so volatile that you can lose your shirt. You lose all the money in your account, more than the money that's in your account. Your wife or husband wants a divorce. It could get ugly. So know the risks. Do not just get in this market because you get a gut feeling. Plan a trade, trade that plan, hang out with me. I'll show you how to do that. Traders, this video, the 2067th installment of these educational videos, coming at you on a Tuesday night for Trading Wednesday, March 4th, 2020. If you've been paying attention, these markets have gone nuts. Volatility is through the roof. There's opportunity to be had, even long or short, if you are getting in at the right spot, getting patient like a professional, and getting out when the profit shows up. What I've noticed in the last few days is if you don't take your profit, it'll evaporate on you. So make sure you take your profits. This thing's whipping around through its range throughout the day, the S&P. Now, we've got some topics on the board. Red Omni flips right back to red. We had a green Omni. We bought twice. We made 30 points on the one trade, 18 points on the other. Go Omni. We never bought it again. And Omni flips to red. So now we'll take the red Omni. We'll sell Rallies, even the S&P, NASDAQ, Russell, and Dow for trading on the 4th of March. Technically, my opinion, 38 years doing analysis, and you know I'm good at it, this market augurs for lower numbers. I don't like the way the charts have set up. I don't like the type of trade look we have right now. I will show you those charts. I don't have many charts to show you, but the ones I do are meaningful. And I'll tell you right now, kids, gold and bonds, they do not rally like this for no reason. This rally's gone on for too long. This coronavirus slowdown is here for a little while. And the Fed today, let me just speak about that for a moment. What would have made the Fed lower rates today? An interest rate cut is meant as a shot in the arm, as an economic trigger to boost the economy when it needs it, right? How the hell is a 50-point basis cut going to get the people from China back into the factories? I mean, what was that for? Do you know when that should have been used? When first and second, especially second quarter reports show up, and these companies didn't sell nearly as much as they wanted to because they ran out of supply. That's when the Fed comes out and uses ammo like a 50 basis point cut. What a waste. I've never seen such a waste of a 50-point basis cut in my life. I mean, why waste the ammo now? You know, okay, here's what's going on. Factories in the U.S. and everywhere else still have some supply that was built up because every factory is smart enough to have a few months of supply on hand. That supply is very quickly dwindling. When they finally start to run out, and the second quarter numbers show that, that's when you're supposed to do the shot in the arm, kids. Now, what are we going to do with this low rate if it keeps going low? My thought on that is the interest rates here were just fine. So the rest of the world has low rates. Do you know what our higher rates have done for us? First of all, the rest of the world's pouring money into us to capture those rates. Second, have you noticed in the last 6 months, all of you who trade stocks, your brokerage bill has gone to zero? They stopped charging you commissions. Do you know why? Because these days, any large brokerage firm, which is also now a bank, bankers are now brokers. Can you say Glass-Steagall? It went bad last time, but for now, bankers are now brokers, right? And here's what they figured out to do. The repo market had to open its doors recently to accommodate a need. Most people are losing their minds. Oh my God, the repo market. Oh my God, it's QE. No, it's not. Here's why the repo market had to get so much money flooded into it. Because brokerage firms decided to give us free brokerage. They're bankers, brokers. They figured, all right, we're bankers and brokers. We'll sweep the accounts at night, put them in the repo market, get the overnight interest. Then we take just the overnight interest and lend it out as a bank loan and receive interest on that while the customers get free brokerage and their money is whole in their accounts. That all of us have been saved. We're saving tens of thousands of dollars a year in brokerage fees. If they keep lowering rates, how on earth are these companies going to continue to do that? You figure that one out for me. They're going to have to beat us over the head with other fees that they invent. So there's so many reasons why the rates right now, we've got ammo to use if there's another 2008 coming where the economic wheels fly off. That's not what this is. This is an overreaction, or whatever reaction, to a virus that, virus season's going to be over in May. It's going to be over. To lower the rate now for that, I don't know. I just think that was a complete waste. I said it absolutely this morning. The second they did it, I said, all that's going to happen is we're going to go down. That was a complete waste of a good moment for a shot in the arm of the economy. Powell, keep the damn bullets in the bag. What are you going to do without bullets if we go down further? I mean, come on, think about it. We're taking on debt like massive amounts in our deficit. You lower rates to the point that we're like everybody else and you're not creating money out of thin air for banks and brokers and people. What happens next? Hold on to that ammo, dude. That's my opinion. You definitely shouldn't have used it today. In my humble opinion, 38 years of watching. Enough of that. Let me now show you why technically this market augurs for lower numbers. With no further ado, let's go look at some charts. Traders, this is what my version of technical analysis, my opinion of working on these charts this afternoon, my opinion shows me that I do not like the reaction that we've seen here. And here's why. You got your Dow Jones Industrial Average Daily Bar Chart. The whole world calls that the market, right? We had this nice bounce off the double bottom. Rallied up big. You know what happened when it rallied up? It filled this gap, and then today it filled the other gap that was left open, had a little tail that went right to the top of what? A major trend line, right next to the 200 bar moving average, and then proceeded to dump all the way back down to here. And the Omni turned red. I don't need to be told by anybody else to sell rallies for trading on Wednesday. Let me blow this chart up for you so you can see it for yourselves. This is blown up a little better. There is a gap here that's been left. I expect that gap to get filled after the coronavirus scare is over. So I guess after May, when it gets hot in China and things cool off, if you will, when they heat up, I think then we fill this gap. But what we did was we rallied up and filled gap 1. Look here, filled gap 2, hit that major trend line, went right near the 200, and fell apart. With a red Omni, kids, I do not like what I see here. I think we take out these lows very, very soon. Now, I do not think the economy is broken. I do not think this is 2008. I think, as I said in last night's video, we just haven't seen enough of the downside yet to accommodate for the slowdown of products that should be coming to our factories that our companies should be selling, right? It's got to show up somewhere. You've heard me say this since this thing started. I think we still have lower to go. I think by the end of the year we'll be much higher, but for now, downside, look out. 30-year bonds do not rally in this fashion for no reason. Bull flag, massive rally. F flag, massive rally. Little bull flag, massive rally into a big bull flag. Golden cross took place a few weeks ago. When the death cross took place, we went down, right? Well, the Golden Cross took place, and look at how high we are now. And I don't know that that stops, especially with Powell talking about lowering rates more at moments when he shouldn't. And then you've got gold. Gold and bonds do not rally like this for no reason. They look almost the same. You pull in a bull flag, it rallies. You put in another bull flag, it rallies. You put in another bull flag, and it rallies. And here we are rallying up. It looks almost like the bond chart. That does not happen in my 38 years for no reason at all, meaning that this slowdown and the markets in this volatility and heading lower is here for some time. So traders, you've seen the charts. That's it. I didn't need many charts to give you my brand of analysis. That's the way I see it. Now look, I'm showing you technical analysis. It doesn't mean we can't turn around and skyrocket and all of this goes out the window and tomorrow we're bullish, but that's not what I see now. What I showed you is what I expect. This looks like there's more coming. Looking at that chart I just showed you, I don't like any of the charts I'm looking at right now. All right, traders, join me at live.oscar.com. Do not trade alone. Don't try this by yourselves. I am here to help you. Grab the free membership. Know where to trade, know how to trade, know where your stops belong, and hang out with me in my live trading room, and we'll get through these rough and tumble days. Live.oscar.com. I'll see you there. Keep those emotions out of trading. Do not make seat-of-the-pants decisions here, kids. You'll get wiped out. Plan a trade, trade that plan, hang out with me. We'll get you through this. But if you don't know what else to do and you're pulling your hair out, say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, gather with me at live.oscar.com in the live chat room. I will see you there. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.